The way I look at a bear market maybe a little bit differently than some. If you were to say, what's a bear market? I would say it's a wonderful, wonderful time where things go on sale.
Right.
And they don't happen very often. And so when they do, they're a very exciting time. And I think I think about it very opportunistically, if that's a word. Is opportunistically a word? I think it is.
It is now.
It is
You're
now.
the brains here, so.
Yeah. And I agree with what Robert said. I'm one of the reasons I associate myself with Robert. I'm a student first, always. And I'm an education advocate, mostly because growing up, I wanted to learn how money worked, and there was no one in school that could ever teach me. So I feel a kinship because I think that was very much Robert's experience.
Yeah.
And so as different as we are in asset class, he's very much a real estate guy. I like real estate, but I've kind of found a niche of someone who can explain stocks well. I think we have an alliance on that front. Is that the educated investor is always it's not so much a function of your asset class, but a function of your personal development as an investor. So those two things, if you're educated, I think bear markets can be an exciting time because I think things go on sale. So maybe we can get into that and maybe give some detail. I don't know. It's a big picture, but sometimes detail's good too.
Sure. Well, yeah, let's talk a little bit deeper. Sure, things are on sale, but what is the actual definition? Like what would I've been reading NerdWallet.
Yeah,
what would NerdWallet say?
I don't know what NerdWallet would say, but I think a popular definition is a 20% correction. When you lose 20, when the market takes a 20% haircut, they say you're in bear market territory. Another one we hit, we flirted on it and popped above it, is the 200-day moving average of the S&P. If you see the price lower than it's been over the past 200 days, some people say that can be the sign of a bear market. Other signals people use, an inverted yield curve. So there's a lot of different. The most popular one I've heard is a 20% correction.
That's actually what the NerdWallet said as well.
See, I'm a nerd. There you go. It's been confirmed. Andy the nerd.
Why do they call it a correction? Like it sounds like that's acknowledging that everything was pumped up.
Generally, when we look at fundamentals, in other words, what is a company worth? How do you value this? Value is in the eye of the beholder. So there's a big debate on what value really is. But a lot of people will see a stock price and say, gee, the emotions and the exuberance of this stock and people wanting to get on, and they get excited seeing the price go up. They say, hey, this thing's probably a little bit overpriced right now. In fact, maybe the market is a little overpriced. It's now time for those prices to be more in line with what the companies actually earn, or what the gross domestic product, generally as a business owner, like if I write a book and I sell the book, generally I get paid for something I produced. It wouldn't be a book that I was thinking about writing someday, or a figment of my imagination. I actually there's product, there's value given for a dollar received, and generally the value has to be more than the dollar, or they won't make the trade. You always have to be willing to give more than you receive as an entrepreneur and a capitalist. Capitalism doesn't work if you take more, or no one will make the trade. They have to want to give you the dollar because they feel they're getting more than a dollar's worth. That's always been. So the reason they call it a correction is they'll say, well, gee, we think that the market isn't in line with the value that we're actually receiving. We're paying too much. We're going to correct that. And that's why they call it a correction.
So when you say someone's in a bear or a bull, it sounds like it's a technical analysis, but the term correction sounds more like a fundamental.
It just says, we've been a little bit high too long. Maybe you could use it technically. Maybe your trend has just been a little bit unsustainable. It's just a little bit crazy. Well, let's correct this and get more of a trend that makes more sense.
Okay, so real quick, I am going to ask you how you invest in a bear market, but
Yeah.
do you see us in a bear market right now?
I see us trying to enter one. I see us on the verge. I've been talking to some really, I get to talk to a lot of people smarter than me, mathematics PhDs and traders of big funds. And I feel like we're teetering on one depending on what the Federal Reserve does. Right now, the Federal Reserve has such a large balance sheet that the way I might say it is, picture them with levers and dials like the Wizard of Oz, and let's do this to the repo market. Let's print some more money here. Let's change the interest rate, and let's look at the discount rate, and let's look at the reserve requirement and that. And what's happening, I feel, is that there's so much pressure of that inflation deflation that these dials are becoming very sensitive. That you turn your dial this much, and oh my gosh, it can cause you do this much and it opens the floodgates 100% and the dam breaks, right? So they're having a hard time in that when you look at inflation, they don't know if A, it was transitory and we're done, B, this is kind of starting to be a problem, or C, even if they did nothing, there's so much money printed now that we might just be in for it no matter what. And the problem is if inflation has gotten out of control, in other words, they've printed more. Look, they were wrong about the transitory, right?
Right.
So all of a sudden, this $8 trillion in their balance sheet starts to get into the real economy. They might have to crank their dial so far that, they're in a mess. So that's a long answer to, do I think we're in a bear market? I don't think we're in one, because we've had about a 10% correction off the top by that technical term. Are we in a downtrend? Whenever you start hitting that 200-day moving average, you watch. I'm looking at my chart on the side while we're talking. Whenever you look at that, break through. Right now, we've kind of whipsawed it a bit. There's a chance of investors saying, you know what, I don't see opportunity here in the short term. I'm going to leave for a while. So that begs the question, or brings up the question, I guess. What do you do?
Yeah, that's the big question. I'm sure that's what everyone here wants to know.
I think a great lesson in this for how I think about it is coronavirus. Coronavirus was a special time for me as a teacher, because I had been through I began my investing, educational pursuits as a student in the 90s is where I took an interest in this stuff. And so the dot-com bust was my first real experience with a massive correction. 7 years later, in the subprime meltdown, I had my second experience. And I just really felt that those two experiences had prepared me as a teacher to give some insight, not of mine, but just pass on what I'd learned from people. And I love Warren Buffett's saying. I have a sign in my office that says, "Hey, I will show you how to be rich. Close the doors, don't tell anybody." And it says, "Be greedy when people are fearful, and be fearful when people are greedy." And right now, I think people are pretty greedy. So you're maybe a little fearful, what Robert's talking about. But in the coronavirus, I don't know that I'd ever teach my sons that greed is a good place to be at in your life ever. But I think the essence of what, Warren Buffett was saying was, when things are on sale, buy them when they're cheap.